It's 2023 financial planning season. Be particularly cautious as you make your personal finance New Year's resolutions. The ongoing conflict in Ukraine, as well as the prospect of war over Taiwan, are exacerbating the latter risk. Furthermore, the economy remains vulnerable to COVID-19 variant-caused shutdowns. All of this is on top of the regular concerns about the stock market in the coming year. As a result, it is critical to protect your own finances. In today's video, we'll discuss 8 financial planning ideas that will help you get your money in order and put yourself up for success. 1. Determine your current financial situation and set goals. The first step in developing a practical financial plan is figuring out your present financial condition. This entails making a list of your possessions, debts, earnings, and outgoings. You should be aware of how much money you are bringing in, where it is coming from, and where it is going. Financial records including bank statements, pay stubs, and bills must be gathered in order to perform this. To help you gain a thorough picture of your finances, you might also wish to use a personal finance tracking tool or app. You can start setting goals for the future once you have a good picture of your current financial status. These objectives could be debt repayment, a down payment on a home, creating an emergency fund, or retirement planning. Make sure your objectives are clear, quantifiable, doable, pertinent, and time-bound. Smart. You can use this to construct a plan for accomplishing your financial goals. 2. Create a budget and track your spending. The most critical phase in financial planning is budget creation, since it enables you to direct your resources toward your most significant financial objectives. All of your revenue and cost sources must be listed in order to construct a budget. You will be able to better understand your monthly income and expenses thanks to this. You may begin directing your financial resources toward your financial objectives once you have a breakdown of your income and outgoing costs. In order to do this, you might have to reduce wasteful spending, look for ways to earn more money, or even do both. You can stay on track with your budget and make sure you're moving closer to your financial objectives by keeping track of your expenditure, which is another vital step. You may track your spending and adhere to your budget using a variety of tools and apps that are readily available. Recall that a budget is a living document, so it's crucial to review and modify it frequently to make sure it still supports your financial objectives. 3. Reduce unnecessary expenses and increase income. A crucial component of developing a realistic financial plan is cutting excessive spending. To achieve this, you must carefully examine your spending patterns and pinpoint areas where you might make savings. This could be cutting your dining out spending, deleting unused memberships or subscriptions, or finding ways to cut costs on domestic bills like groceries. Another strategy to strengthen your financial status is to increase your revenue. This can entail negotiating a pay increase or promotion at your present position, accepting more freelancing or part-time employment, or beginning a side business. Remember that boosting your income and lowering your spending can both speed up the process of reaching your financial objectives. For instance, if paying off debt is your objective, increasing your income and cutting back on spending can make it easier for you to set aside more money each month for debt repayment. 4. Prioritize and pay off debt. If you have debt, it's crucial to give paying it off top priority as part of your financial strategy. Make a list of all of your debts, listing each one's creditor, interest rate, and required minimum payment per month in the process. The next step is to rank your debts according to interest rates and other criteria. For instance, paying off high-interest credit card debt before taking on lower-interest student loans may make sense. You can utilize a variety of methods, such as the avalanche and snowball methods, to pay off your debt more quickly. The avalanche technique is paying off your debts with the highest interest rates first, whereas the snowball method entails paying off your smaller bills first and working your way up to the larger ones. It's crucial to remain consistent and pay all of your debts at least the required minimum each month, and preferably more. Additionally, you might want to think about debt consolidation or refinancing to receive a lower interest rate, which can help you save money over time. 5. Create an emergency fund. A savings account designated expressly for unforeseen costs or financial emergencies is known as an emergency fund. In the event of an unforeseen need, having an emergency fund in place can help you avoid financial setbacks and lessen the need to rely on credit cards or loans. Your specific situation will determine how much money you should put aside for an emergency fund, but as a general rule, you should aim to have 3 to 6 months' worth of expenditures covered. If you face a loss of income or unforeseen expenses, this will act as a cushion. Setting a savings goal and figuring out how much you can reasonably set aside each month are the first steps in building an emergency fund. Open a different savings account after that, and add money there on a regular basis. Making your emergency fund accessible is a good idea in case you need it, but keeping it out of sight can help you resist the temptation to use it for non-essential costs. 6. Protect your assets with insurance. Ensuring your assets and financial security in the case of an unanticipated circumstance, like a natural disaster, illness, or accident, is a crucial part of financial planning. There are numerous insurance options to think about, such as health, life, vehicle, homeowners, and renters insurance. Consider your financial circumstances and the things you want to protect when choosing the proper types of insurance for you. For instance, homeowners insurance is crucial if you own a home to safeguard your investment. If you have children, life insurance may be able to help ensure your family's financial stability after your passing. Additionally, it's crucial to routinely assess your insurance coverage to make sure it currently meets your needs. This can entail changing your coverage as your circumstances change or raising it as your assets increase. Consider seeing a financial planner or insurance expert for advice if you're unsure of the kind of insurance you require. 7. Review and update your financial plan regularly. A financial plan is a living document, so it's crucial to frequently evaluate and update it to make sure it remains pertinent and supports your financial objectives. This could entail changing your spending habits, reviewing your debt repayment and saving strategies, or reviewing your insurance coverage. Reviewing your financial strategy at least once per year, or more regularly if significant life events like getting married, having a child, or changing employment occur, is a smart idea. This will ensure that you stay on course and go closer to your financial objectives. Be cautious to take into account any modifications to your situation, such as an increase in income or unanticipated expenses, when revising your financial plan. Additionally, you might want to assess your investment portfolio to see if there are any adjustments that need to be made in light of your risk tolerance and long-term financial objectives. 8. Seek professional financial advice as needed. Professional financial counsel can aid your financial goals. A financial planner or advisor can help you establish a tailored financial plan, recommend investments, and advise on financial products and techniques. If you're thinking about hiring a financial planner or advisor, make sure they're trustworthy and aligned with your goals. Find a fiduciary who must prioritize your interests. It's crucial to know what you'll be paying and how the fees are structured before you hire the services of a financial planner or advisor, because they might charge a fee for their services. There are other options, like online financial planning tools and instructional materials, that can assist you in managing your finances and achieving your financial goals if you're not ready to work with a financial planner or advisor. Financial planning may appear discouraging at first, but by following these guidelines and making a budget, saving and investing for the future, and protecting your resources, you can take charge of your financial destiny and put yourself up for success. Thank you for watching, and please subscribe for more financial planning guidance and insights.